Very broadly, negative gearing is where you've borrowed money to purchase an investment and the costs of that funding plus the expenses related to that investment exceed the income you're receiving from that investment. So with a rental property, for example, which is quite a common example, it's where you've borrowed funds or you've borrowed money to buy that rental property, and the interest on that loan together with the rental expenses exceed the rental income for that property. So generally this will create a tax loss, which you can then potentially offset against your other income that you have, so things like your wages. It's worth noting that if you own your rental property in a trust or a company, then any losses that you accrue will be quarantined in that entity and can only be offset against other income of that entity. You can't distribute that loss out. With a rental property, you can only claim deductions where the rental property is being rented out, or what we call available to rent it out. So available to rent it out is where your rental property is not currently being rented out, but you're actively looking for a tenant and you're advertising and things like that. It's also worth noting that you can only claim expenses to the extent that it's been rented out. So if it's not been rented out, then you need to, for the year, or not available to rent it out, you need to apportion those expenses. And similarly, if you've got personal use of the rental property during the year.